Hello, everyone, and thanks for tuning in. This is Ross Silver. I'm the CEO and founder of Silva International. With me today is Peter Bortel, the founder and fund manager of the Tiburon Opportunity Fund. Peter, thanks for joining me today. First, if you don't mind, I'd like to ask you a couple questions. The first being, uh, could you just give us kind of a quick background on when the fund started, your investing approach, and returns that you've experienced since your inception?
Sure, Ross. I started on the buy side in 1996. This particular fund's inception was 2010. The strategy is deep fundamental value, trying to buy a buck for 50 cents basically, with a strong focus on financial services and special situations.
So, I stated in my newsletter last month that my belief is passive managers will begin to underperform active managers, meaning people investing in indexes will not experience the type of returns fund managers like you can provide. But given the Fed's thinking on rates and their intent to hike, I think that will lead top active fund managers or put them in a position to outperform. What are your thoughts on this topic?
Well, we've kept the fund asset sensitive, which means higher rates from a Fed funds rate would be good for the performance of the fund. Even with Fed funds kind of drifting around the zero level since 2009, we've managed to outperform every index that we benchmark. Returns are good, but I think the returns will be even better once the Fed moves the short rate up. We've heard about and read about the concept that passive fund management and an ETF strategy is better than active fund management. And I agree with that if it's a large cap strategy where everything is known. Our focus, though, is on small cap stocks where in several circumstances we don't have any analysts following the security. We've done our own homework, we've done our own research. We know that the company is going to do well or do poorly depending if we're long or short respectively. And we'll establish a position and hopefully we'll continue to outperform the market as time goes on.
Okay, thanks for that. And then, are there any particular industries, and within those industries, companies you're excited about? And can you share with us a few of those companies and why you're invested in them?
Absolutely. One company we're invested in outside of financial services is Health Insurance Interactive, HIIQ. We got involved about 2 years ago. Our holding period for something like this is typically 5 to 7 years. The company at the end of next year should have $3 in cash on the balance sheet, should be earning about $1 in EPS, and should be growing at 30% year over year on top and bottom line numbers. The stock price is $5 today, so you can imagine why something like that is very attractive to us. Our price target on that is more like $17. So that's a good example of a deep fundamental value with a very strong balance sheet, good earnings growth priced at a very reasonable valuation.
Okay, great. Thanks for sharing that. And just in wrapping up here, if an investor is interested in investing in your fund, how do you suggest they get a hold of you?
They can contact me at my office, 253-858-7866, or on my cell, 253-370-3130. And of course, you need to be an accredited investor to become a limited partner of our hedge fund.
Okay, great. Well, thank you so much. I really appreciate your time today, Peter, and providing some insight for some of our viewers here who really don't get the opportunity to see or sort of mix with institutional fund managers. So this will provide very helpful. You shared with us an idea that sounds very exciting, and I thank you for that. And so have a great weekend, and I appreciate your time.
Good. All right. Take care, Ross.
All right.